2024 was an incredible year for investors, with the stock market rising to record highs. The German DAX 40 increased by 19%, the S&P 500 25%, and the Nasdaq 100 a staggering 28%. But 2025 could be a lot different with the German elections in February, Trump introducing new tariffs left, right and center, and Reuters seeing increased risks for the global economy. So if I would start investing all over again, now, in 2025, here's exactly what I would do. Cash is king. That's why the arguably greatest investor in human history, Warren Buffett, is currently holding $325 billion in cash. You might not need that much in cash, but you should still have an emergency fund, about 3 months of your spending, just in case something happens. And so your emergency fund is not sleeping with 0% interest on a bank account. Here are the best savings accounts in Europe with up to 3.5% interest. Usually, fixed-term savings accounts give an even higher interest, but not as of making this video. Surprisingly. So check out both accounts in case that changes again. They are linked in the description. And if you click on the blue buttons, you might also get a bonus, like here with €40 from Consorsbank. And the last option, before we come to the big investments, something you guys ask us a lot in meetings: bonds. Bonds are basically loans that you give to companies or governments, and in exchange you get interest. I'm not a fan of bonds at all. Because of their inverse relationship between interest rates and bond prices, if interest rates fall, bond prices go up and vice versa. They are way too vulnerable for any short-term political decisions. And with the American Fed and the European Central Bank meeting almost every month to determine new interest rates, there's too much turmoil for me personally. So I'd rather put more money into one of these high-yield savings accounts and invest the rest for the goals that I have in life. In gold, for example, often called the safe haven for investors, which I don't really agree with, because gold can be pretty volatile and lose more than 30% in value in just 1 year. But for the volatility, you get a pretty good return of 35% last year, 165% over the last 10 years, and 636% over the last 20 years. And all these returns can be completely tax-free. How? You just gotta invest in physical gold or gold ETCs rather than gold ETFs. ETFs are always taxed with 25% capital gains tax, with one exception we'll come to later on. Physical gold or gold ETCs would be completely tax-free after holding them for 1 year. That shows you how tiny little differences can have a big impact on your financial future. So if you want to make the most of your very own financial situation, book a free meeting with us on perfinex.de/meeting. From one tax-free investment to another. Oh boy, Finanzamt will love this video. Crypto, and mainly Bitcoin, is basically like gold, but on steroids. It's tax-free after 1 year. It's apparently the best performing asset of the last decade, even though there seems to be a huge debate about this online, and the volatility is absolutely crazy. Bitcoin dropped more than 80%, 3 times over the last 15 years, which shows you that this is a high-risk, high-reward investment for sure. I personally put €500 in Bitcoin a while ago just to try it out. It more than doubled, okay, but it could have also gone to 0. But neither scenario is going to change my life significantly. And if you're not absolutely sure about an investment, this might be a good approach for you too. Don't get greedy when you see these kinds of returns, because this will cloud your judgment with emotions. And a successful investor should be rational. I'm not getting any FOMO, fear of missing out, when I see these returns that I missed, and neither should you. And you also shouldn't get any FOMO with the next investment, the stock market, if you remember the 20% returns from the beginning of the video. Stocks go up, stocks go down. The point is that you should evaluate if it's worth investing in single stocks or not. Yes, every once in a while there's a stock like Nvidia that goes to the moon, but the St. Louis Trust Family Office finds in a study that half of 25,000 publicly traded stocks lost value from 1926 to 2016. 42% barely outperformed treasury bills, which is basically high-yield savings accounts again that we talked about earlier. So why take the higher risk? And only 4% of all stocks accounted for the total wealth creation of the last 90 years. Let that sink in and tell me again that single stocks are a great investment. The odds are massively stacked against you, and that's why ETFs have become so popular over the last years. Because ETFs allow you to buy many different stocks at once. So you're not reliant on finding the next Nvidia in this vast majority of losers. Now that the stock market is on an all-time high, am I worried that the big crash is coming in 2025? Not one single bit. I keep a healthy cash reserve in my emergency fund. I'm in my mid-30s, so I have decades that I will continue investing. I don't give a single what the stock market does next week, next month, or next year. It's the same question many of you guys have with real estate, the next investment on our list. We made an educated guess in this video what could happen to real estate prices in 2025. Will they rise or will they fall? Nobody knows the future, of course, but the point is that there are massive opportunities out there right now. And even if property prices won't rise double digits like they did during the 2010s, it will still be an awesome investment if you do it right, like we teach in the video. Not if you get scammed like the guy in this video, who lost at least 700,000 euro with the property he bought. And please, we discussed this in many instances as well. Do not get a Bausparvertrag no matter how much the sleazy bank salesman is trying to convince you. We have seen hundreds of these things over the years, and not a single one of them was a good investment. Rather stick to the savings accounts if you want to keep your money safe, and if you would like a little more risk, then invest it in the other things on this list. And that brings us to the one goal every one of you guys watching needs to save and invest for, myself included: retirement. And German pensions, just like the Roth IRA in the US or the ISA in the UK, are an awesome way to invest in ETFs with tax benefits. In fact, they are the best way to invest in ETFs under one assumption: that you're a long-term investor. Pensions level 1 give you the most tax benefits of all, because singles can invest more than 27,500 euro and deduct it from their taxes, and married couples more than 55,000 euros. And if you pay 42% income tax, which you do after earning 67k as a single or 130k as a married couple, you get 42% of your investment back when filing your taxes. Maxing out your base pension level 1 could give you more than 23,000 euro tax benefits. The tax benefits of level 2 pensions are a little smaller, but you get something additional on top. With the company pensions you pay less social security, and with the Riester pension you get a 175 euro adult bonus and a 300 euro bonus for every child you have. And the most popular pension among you expats is the level 3 pension. Why? Because it's the most flexible pension out there, so if you're not sure how long you would like to stay in Germany, it might be right for you. Might. Before you get any pension, we want to think about this in detail and weigh the pros and cons together. Because pensions are meant for the long term, as I said earlier, and to make sure your short term is great as well. You might want to watch this video now to make the most of your 2025.